Hey everyone, welcome back to your weekly market outlook. And we are basically going to be starting the month of April tomorrow. A lot of stuff to cover as well as, with the Trump tariffs and whatnot. So we're expecting a huge volatility this week in the market, especially, leading up to the so-called Liberation Day on the 2nd of April. All right, before that, let's take a look at last week's numbers here. We've got manufacturing numbers from, across the Europe as well as the US there. We did see services number improving. Manufacturing number was actually a little bit lower across the board there, especially for the American numbers. It fell down below 50 again. So we're looking at a little bit of contraction there. And we have the final GDP numbers from the US. That was a slight improvement, just 2.4%. That's for the quarterly numbers there on December. And the PCE numbers is also increasing. The core numbers has also increased as well. The monthly growth has went up from 0.3 to 0.4%. Year-on-year number has also went up. So inflation is actually picking up pace in the US, although it's not that big of a deal at this point in time with the FOMC economic projections. They were kind of expecting the PCE numbers to kind of start picking up as well. So that was last week. We also saw the UK inflation number as well as the Australian inflation number kind of dip down a little bit. The UK number dipped down quite a lot from 3% to 2.8%. And, despite all that, there's actually a lot of interesting things to talk about, especially in terms of the US strength this week. All right, a couple of changes here. Daylight savings in the Eurozones. So yeah, just keep that in mind if you are, trading the European Open as well as the UK Open. There's a daylight saving shift there happening on pretty much yesterday. And Monday, we're going to be looking at Germany's preliminary CPI numbers there, and then we are going to be looking at the interest rate decision from the RBA this week. That's going to be on Tuesday, 2:30 p.m. Australian time. They're expecting it to hold rate steady at 4.1%, although the statement should sound a little bit more on the dovish side. I think the RBA is still on that trajectory for that rate cut in 2025, so we are expecting that to happen. All right, labor market data. Starting with the JOLTS job opening numbers, that's going to be on Wednesday. That's going to be on 1 a.m. Wednesday Australian time. It will be on Tuesday in the US. And then we have the ADP numbers as well. That's the ADP and FE numbers. That's going to be on Wednesday as well. And then the weekly unemployment claims, which is going to be on Thursday. But then, yeah, the NFP numbers, that's going to be the one that we're going to be focusing on. NFP numbers expected to fall down quite significantly below 150,000 mark there. We're expecting 139,000. Unemployment rate expected to remain stable. Just a quick note here, in terms of the unemployment rate, it's not really a concern as long as it doesn't exceed 4.5%. That's the limit that the FOMC has given out in terms of their economic projections. So the next 3 months, as long as it doesn't exceed 4.5%, the FOMC is not going to be doing anything at this point in time. Unless we do see the number kind of surprises to the upside. But again, focus is going to be on April 2nd, right? So that would actually be April 3rd in Australian time. That's where we should be a little bit more on the careful side. And that's because Trump is going to be announcing the tariffs. And hopefully it's going to be the final numbers here. No change of minds coming up from Trump. It has been 2 months where he put on a tariff in Canada, Mexico, and then postponed it, and the next month put it on again, and then within 2 days it's off again. Also on and off, so forth. Hopefully this one is the final tariff numbers, and he doesn't change his mind. Creating a lot of uncertainty in the market there. Just to note, for example, there's a lot of run to safe havens there, especially Japanese yen and gold. Gold has posted a new high today. At time of recording, it was 3,115. So just keep that in mind. It has been punching through higher. And we can safely say now that the safe haven flow runs to gold and the Japanese yen. It doesn't run to the US dollar. In fact, the US dollar, we're expecting the US dollar to potentially weaken. We're expecting the tariffs to kind of backfire. And in the context of what we have seen from Trump, one of the things that he did mention when he was running for office was he wants to devalue the US dollar. I think it is working, and what he's doing right now in terms of how these tariffs and creating all this fear, it seems to be working in his favor in terms of valuing the US dollar. So that's something to keep an eye out for as well. All right. Let's take a look at the technicals. The Aussie at this point is, I would say it's pretty much stable. Last week we kind of dipped just out of the Ichimoku cloud there and now back inside the Ichimoku cloud. But from a technical perspective, it is actually above the Ichimoku cloud. We are currently looking at immediate support at 62.50. Floor, we're going to be looking at 62 cents. In terms of the highs, we're going to be looking at 64 cents. Where price is going to matter this week, it's going to revolve around that 63 cents mark. So I'm expecting the Aussie to be stable. And with the RBA, even though they come up with the dovish statement, I think that could still push the Aussie up a little bit. It's not in terms of the Aussie weakness at this point in time. We have seen negative numbers come out from the Aussie economy there, and it's not really moving the Australian dollar much. So I think it's more on the US dollar weakness at this point in time. All right. Some of the earliest clue that we have here on potential US dollar weakness that we are going to be focusing on this week, it would actually come from the currency major. So things to look at, if we take a look at the RSI here, it has maintained a position above 50. So that means that the uptrend is still intact. And also the stochastics here is about to turn. And if it does make that turn, we would conclude that the correction on the Euro USD is limited to very close to at about 38.2. Immediate floor that we have here is 1.0750. Immediate resistance is going to be 1.09. Any break above 1.09, we're going to be seeing further push in the Euro USD, expecting 1.10, and potentially even 1.11 if the US dollar, kind of get weakened a lot. If there's a lot of uncertainty with the whole tariffs here, and I think the market is reflecting that at this point in time. We already saw equity market kind of pulling back. We saw that run to safe haven, to the Japanese yen as well as gold. It's a telltale sign that the correction that we're looking at in the market here is pretty much completed. It's not as deep as what we wanted, but it would fall under a normal correction category here, especially on the Euro USD. So, yeah, despite all the chaos that we have in the market, I think the whole tariff situation could actually backfire on the US dollar, and I think that's basically what Trump wants. In terms of devaluing the US dollar, I think we might actually get that. So the market could actually react to a potentially weaker US dollar this week. Same scenario with the sterling here, and sterling is basically really persistent. The RSI is not dropping even below 60 at this point in time. It's very well supported. Uptrend still intact, and you can see how the market has been flatlining here. Now this would fall under what we call an accumulation phase. It's just that we're not sure whether this is going to be an accumulation for a break above 1.3, or this is a point where the smart money is actually doing a little bit of a distribution. And that's the thing with the sterling here at this point in time. From a technical perspective, it remains in an uptrend. Just be a little bit more on the cautious side because it's starting to range bound. And that range bound market condition, depending on the break here, obviously, any break below 1.2850, then we might actually see a deeper pullback here on sterling. But if this is an actual accumulation phase for a potential breakout above 1.3, and if the USR weakens this week, this is actually a very good opportunity. So just keep an eye out on 1.3 and 1.2850. These are going to be the two levels to keep an eye out for. And if you take a look at where the weekly pivot is located, the support one is actually at 2.850, and the resistance one is pretty much at 1.3. So any break above this two pivot levels is going to be the decisive movement on the sterling here, at least for the next week or so. So just keep that in mind. All right, lastly we have the Dow Japanese yen, and you can take a look at the Dow Japanese yen, and the stochastic has already crossed this over. Now, one thing that a lot of traders need to watch out for, it's now back at the bullish order block that we have. The other interesting thing is it also broke above the resistance trend line, and at time of recording, it is actually testing that resistance trend line as a support. Now, if price doesn't dip down fast enough below 149, ideally I want to see price quickly dip down below 148, then we're not going to see that move in the US dollar. So with the view that this week, everything could backfire against the US economy. We're looking at safe haven flows because the market is pretty much very uncertain. And if we see the VIX index picked up, then we could very easily see a very quick drop on the dollar Japanese yen here. Again, support that we have here is 148. Any dip below 148, then I think we're just going to cut through 147 like butter, straight down to 145. Now, whether or not this one here has enough momentum to pick up towards 152, I think it's over, right? The stochastic has already turned around. The RSI never dipped above 60, so it actually maintains a very strong downtrend. This is the reason why our view this week is a potentially weaker US dollar. So just be a little bit more careful if you're collecting this for carry trades. There is a higher probability that there's a flow to safe haven, and the Japanese yen could actually benefit of that. That would weaken the dollar Japanese yen. So just keep that in mind, okay? Expecting huge volatility this week, so good luck with the trades, and I'll see you soon.